Right. Good morning, everybody. We're just waiting for everybody to join the webinar. We apologize for the 2-minute delay. We'll start shortly. Right. Good morning and welcome to all our TTA members and other industry colleagues, as well as the stakeholders. By way of introduction, my name is Nico Rowan. I'm the chairperson of the Tshwane Tourism Association, otherwise also known as the TTA. I'll be the host for today's webinar, which is brought to you by the TTA. I'm also assisted by Big Ambitions that has set up this session for us. Thank you very much, Natalia Rosa, the director of Big Ambitions. More than a year has passed since the TTA first began to gather information and member business interruption insurance claim challenges and consult with insurance industry and legal professions to obtain assistance and advice for members. The 5th of June will also mark the anniversary of the TTA's first meeting with the Financial Services Conduct Authority, FSCA, to lobby for government intervention to support insured parties related to rejected business interruption claims related to COVID-19. The purpose of today's webinar is to provide you with an update and the progress made on claims processing, quantum negotiation, and the court action, which is still underway relating to this matter. In order to provide you with these updates, we are very privileged to have with us Ryan Woolley, the CEO of Insurance Claim Africa, ICA, who is representing a large number, actually should say massive, 850 of you in your cases against the insurers. As well, we'll be joined later by Financial Sector Conduct Authority, FSCH, which is the market conduct regulator of financial institutions, which includes insurers and brokers. The FSCA team will join us for a Q&A session, and I will introduce them all to you later. So Ryan will give us an update on the progress of claims and cases against the various insurers, followed by FSCA, who will provide answers to some of the questions regarding the oversight of the FSCA. We will then open the floor for questions and answers. So please do type your questions into the question box as we progress. I would also suggest that you wait until Ryan has given us the update before you ask questions, because we have received many questions from the participants and we will address them during our update. So please wait until you've listened to Ryan as well as to FSCA. Ryan, ICA is well-published as South African law, is well publicized as South Africa's largest independent insurance claim expert, working only for the insured parties in matters of claims and quantum calculation and negotiation. We have worked closely with you and your firm to consolidate efforts to ensure that insured parties are treated fairly in this matter of business interruption claims related to COVID-19. And I would like to thank you for all the support and the time, lots of time you have given to us as an association to assist us, to assist all our members. Thank you for joining us online today again. And I would like to hand over to you now to give us an overview of the progress on the claims and cases against the various insurers. Please, Ryan. Thank you.
Thanks, Nico. And thank you for having me and hosting this webinar. I think it's a good forum to reach a large audience and to just try and keep the public informed as to where we're at, where we've began and where we're going with these claims. Okay, so I think maybe just a snapshot to go back and understand a little bit about where we started. As you mentioned, we're a public adjusting company. We're the largest in Africa and Indian Ocean Islands, and we handle complex insurance claims. We hold ourselves out as business interruption experts. Our team is chartered accountants, qualified attorneys, and insurance professionals. We have, through our history, we've had many clients in the hospitality and tourism space. And when COVID-19 broke out in South Africa and the lockdown regulations started to flow from the government, they then started to ask us to have a look at their policies to see whether we thought there was potential for claims. Obviously, the devastating effect of COVID and the lockdown regulations is well publicized and is known. The insurance industry took a very strong stance that they were not going to pay these claims, these business interruption claims. And we were the lone voice saying that these claims should be paid, which was completely supported by the FSCA in all of their published updates. So with that in mind, we started the process of assembling a legal team and looking at these policies and approaching clients to build a critical mass so that we could look to see whether we could fund the litigation in order to almost run test cases in South Africa to set the legal precedent. When we looked at this, we saw that the insurers were saying that, look, they don't believe that these policies should respond because they don't cover pandemics. They said that the government reaction to a notifiable disease was the cause of the loss and not the notifiable disease within the radius. And we didn't agree with this. We thought that their policy wordings clearly stated that this was covered. And we then set about engaging with certain insureds to try and establish the legal certainty that was required. The FSCA were very strong in speaking to all the insurers and dealing with them, and obviously getting them to understand that this was an issue that wasn't going to go away and that they weren't going to allow, clients to be pushed to one side or lost in litigation. So we then partnered with two critical insureds. One was My Africa Hotel Group with Andre Pieterse, and then secondly with Cafe Chameleon with Nico Skuman. The attorneys for My Africa were Thompson Wilkes and Al Bespier. We involved David Bayliss, our attorney, in that as well. And then also with Cafe Chameleon, we partnered with Ren Dunster. Through this, we then quickly started to establish that we needed to run this litigation in order to establish the legal certainty that was required. We set about assembling a legal team that we consider the best in the country, consisting of senior counsel led by Jeremy Gauntlet in both matters. I'm pleased to say that in in August last year, we were heard in our first round in the My Africa matter, and we then had our success in front of a full Cape bench in November last year. And then we were in the Supreme Court with the Cafe Chameleon matter, and we had a judgment in December, which effectively said that your claims were valid for business interruption, provided that you could prove that there was a positive case of COVID within your radius, and that the government regulations that followed, lockdown regulations, were also part and parcel of the insured peril and were part of the claim. So with that, we were then into December last year. It was a long, hard fight, a legal battle. And once those judgments started to fall, we saw Hollard in December start to admit liability for these claims. In January, the FCA test case, which was run in the UK, which we also had involvement in through Pragmaticum, our affiliated company in the UK. And essentially, the FCA test case also ruled in favor of the policyholder, saying that the claims were valid, and they dealt with the issues of causation, trends clause, the Orient Express case quite clearly, albeit slightly differently to the way that the SCA had dealt with that in South Africa. What that did was, it was the final nail in the coffin for insurers, and their defenses then crumbled. And we then saw Santam as well abandon their My Africa case for the merits. They are still disputing the indemnity period issue, but I'll get into that a bit later. And the FCA test case also caused several other insurers to then start to acknowledge and accept liability for these claims. We had Old Mutual, Bright, and so on, all falling in line. Essentially, that took us to February this year. And in February this year, the insurers had suddenly awoken to the fact that they now had to instruct the loss adjusters to start adjusting these claims. Now, to put in context, A business interruption claim is normally quite a lengthy process. It obviously requires a lot of financial analysis, understanding of the policy, and there are detailed negotiations that normally happen between the loss adjusters and ourselves, or the loss adjusters and the insured, to determine the quantum. The reality is that there's only about 40 loss adjusters in the country that are competent at doing business interruption claims. And what we now had was a tsunami of claims that had come at them that they now had to deal with. And we've seen that as a major bottleneck in the process. The loss adjusters have reacted by obviously bringing in additional resources and trying to, train on the ground, on the run. But essentially, that's also slowed down the process because these, loss adjusters that aren't experienced in BI don't know how to flex the policy or how to make recommendations to the insurers that would then provide for swift settlement. We've also had the insurers grappling with trying to give the reinsurers enough information so that they can recover their portion of the claims versus the information that the loss adjusters need to provide them in order to validate interim payments or settlements. So because they've initially didn't appreciate the fact that we were in a catastrophe environment, they were quite slow in terms of releasing interim payments, as well as finalizing these settlements or adjusting the claims. They were being quite pedantic in the adjustments. We must at this point just also say that the FSCA was quite instrumental quite early on in negotiating the relief payments that we received from the insurance companies off the back of the litigation that we had run. And I think that those relief payments we're seeing in certain of the claims actually extinguished the insurer's liability, and there would only be a further top-up due if we're successful in the MyAfrica case. With that in mind, and the bottleneck that we're faced, we started engaging with a lot of the insurers, asking them to find a way to try and make further relief payments to fast-track the process. We're very pleased to say that we've had good engagement from Hollard from the outset. They've been exceptional locally in the handling of these claims. Santam have also reached out, and have been proactive in terms of how to work and adjust these claims and make interim payments. More recently, OMI and Factory and Industrial have stepped up to the plate and have definitely started to engage with us and ensure that the claimants receive at least interim payments whilst the claims are being adjusted. HRC obviously made initial settlements offers, which the majority of clients did take up. There are still a few claimants out there that didn't take those settlements, and those claims are being adjusted, and we're working through that process with HRC accordingly. There are a few outliers. We've got Chubb, who to date haven't accepted liability of any claims that we are working on. And we're starting to see that on the corporate claims that companies like Bright are saying that they don't believe that the judgments apply, and that they are still asking us to validate causation and going back to the trends clause, etc. So that's quite frustrating and is causing delays in the claim process. We're also seeing, now that we're into this, effectively the insurers have accepted liability for these claims, but we're now into the quantum fight. And the quantum fight is actually quite tenuous. These insurers are obviously trying to limit their exposure. The one thing we can say is that we're seeing that these claims aren't as large as the insurers initially thought. They're definitely the savings, which are the costs and expenses that insureds didn't incur because of COVID-19 and didn't have to pay. So therefore, they're saving to the insured, they're saving to the insurer when it comes to the settlement calculation. And those savings reduce the amount of the claim quite substantially. An aspect that also reduces the claim is underinsurance that we're seeing, which is basically clients not being adequately insured. So you're effectively self-insured for a portion of the loss. We encourage all those clients out there to look at their policy coverage in terms of the sum insured that is set. Please make sure that you're taking trends into account as well as VAT when you're calculating these insured amounts. We've got a website called the BI Calculator that you can find on www.bicalculator.coza, and that will assist you in setting your sum insured and quantifying it. We encourage brokers to use it as well and to widely use it with their clients. Those two factors definitely undermine the value of the claims, and unfortunately that does have an impact on the sustainability of the tourism industry. The other thing that has an impact is the time it's taking to settle these claims. And that's, as I've said to you, there is a bottleneck in the process that we are working with the insurers to try and unlock, but it is difficult, to do that without, while still complying with the reinsurers' requirements. We've also seen that there are quantum disputes that are coming up, which, we are working with the insurers to try and resolve amicably. But if not, then they might result in some form of litigation or arbitration. It may even be necessary to run some form of test case for these issues. One of them that we feel quite strongly about is obviously salaries and wages, where the insurers want to deduct any non-payment of salaries and wages, or in particular where insureds have said, listen, you didn't pay me on time. I had no money to pay my staff salaries and wages. So I had to put them on 50% reductions, 30% reductions, and so on. The insurers get the benefit of any TERS payments that were made, or through UIF, and those come as a straight deduction to the claim. So the insurers get that benefit, and then they're saying that they also want the benefit of any of the reductions that insureds gave to their employees. And those insureds generally, not all of them, have said that they would like to reimburse, and they have got a duty to reimburse those employees. And where there is an accrual in place, or where there is a liability that's created, we are able to try and take that to insurers to say, listen, guys, you need to pay these salaries and wages so that these employees can survive. These employees are going further into debt. They are not from high income, families. In fact, they are minimum wage, and slightly above. And it has had a devastating effect on the economy, as well as on the communities around these lodges, businesses, and restaurants. We've also seen that trend has become quite an area of debate, where the insurers are trying to take the month of March into March 2020 into their calculations of the trend, which obviously causes a downward adjustment to the trend, which does influence the number that the claimant can claim. And what we're saying is that March is an affected month. If we look at the FCA test case in terms of how that litigation was judged, it basically said that the counterfactual, so in other words, what you need to compare against, as if there was no COVID. And we're not seeing the insurers apply that logic when adjusting for the trend. So that's quite a big bugbear of ours, and it does undermine the value of these claim settlements. And we're seeing quite a strong resistance from insurers on this issue. We're also seeing the issue of rental rebates, where landlords have given tenants rental rebates come in to be a dispute. And these rental rebates, essentially your landlord has said, listen, we'll give you 50%, or we'll give you 3 months rental relief. The insurers will take that as a saving, a negative adjustment against your claim, because you did not have to pay that money. But at the same time, they're turning around and saying, yes, but we're not going to reimburse your landlord for any of those rebates that you've been given. So what that does is it creates tension, where the landlord then comes back to the tenant and says, no, you still now have to pay that, albeit in a different shape or form. And we find that that's a bit disingenuous. We feel that they should be consistent with the adjustment of these claims. And if they're going to take the saving, they should pay the landlord's claims. Alternatively, they should not take the adjustment for savings and allow these claims to be paid in full. And these are quite technical issues, but they do give you a flavor and an understanding of what the technical fights are. And these generally are worth between 20 to 30% uplift in the calculation of these claims. So they do become fairly material. We've also seen that in all the templates that have been issued by insurers and the adjustment of these claims, they've ignored the fact that there's been an erosion of margin by and a loss of margin by clients. So in other words, a restaurant, for example, that might have been allowed to open during their 6-month indemnity period for 3 of the months. And during those 3 months, they earned turnover, which the insurer will say, well, you've earned turnover enough to say that you don't have a loss for those last 3 months. But the fact is that they've earned that turnover through running specials, through operating with discounts, to paying for delivery charges and the like, which has eroded their margin. And those costs are claimable, and you should be put into the same position you would have been in had there been no COVID. And that's essentially what we're arguing. We have got fertile ground with insurers on that point, and they are looking at it. We've had other disputes around foreign guest income and that, which have largely been resolved in South Africa. And I think that that's, the state of play in terms of the quantum of these claims. We're just grinding away. It's tedious. We do think that this is probably going to carry on for at least another couple of months, in the hope that we have submitted all the claims and that we've got to a point where we can essentially resolve the issues. We currently have 850 clients. We've got 130 of those claims that have been settled, and we've got a further 420 odd interim payments that have been made across the board. So that gives you a sense of where we are at. There are a large majority that claims have been settled, but are in the pipeline, waiting interim payments, waiting confirmation of cover, and awaiting settlement. In terms of the landscape going forward and the reality around ongoing litigation, we are currently still in litigation with Santam on the Mar Africa matter. This litigation is at the Supreme Court, hopefully in August this year. Both the heads of argument from our side and Santam have been received by the FSCA. And we've obviously asked for the matter to be heard urgently in order to try and finalize the issue. August does look like the date it's going to happen. And the dispute is currently around whether there's ambiguity in the policy schedule, whether it's a 3-month period or whether it's the full indemnity period, either 6, 12, 18 months, whatever the client chose. Obviously, we won the first round of that in front of a full Cape bench, where they said that there was ambiguity and that the indemnity period, the full indemnity period of 18 months in that case applied. This obviously affects a large number of our claimants, as well as those that are in the industry that we don't represent. And it is going to be the subject of quite a bit of debate once the court decides which way it should go. In terms of that, the case is still being led by Jeremy Gauntlet and the legal team, and we do feel very strong in our position, but at the very least, the schedule is ambiguous, and we'll just have to wait for that litigation to play out. We've also got issues with the insurers around how the limits per policy should be applied. For example, we've got a host of schools, 100 odd schools that are insured under one policy. They used to be on multiple policies, and essentially we're saying that each school should be allowed the policy limit of X million rand, whereas the insurers are saying, no, you're only entitled to 1 limit. So those sort of issues will be the subject of either some form of litigation or arbitration. We've got the issue of rental relief, whether that's covered in terms of the policy or not. Obviously, our view is that it is. And then we've got, I suppose, there will be other policy interpretation issues that have to play out. And then also the broker professional indemnity claims that we are seeing flow out of these claims. It's unfortunate, but it is a consequence of catastrophe claims. I think that we are still seeing insurers trying to limit the amount that they pay. We are having to drag them to the cash register to try and open that and get money flowing, but largely we are finding traction with those 4 insurers that I mentioned, and they are working with us to move forward. It does feel like sometimes, especially in terms of the corporate claims, that, like I mentioned with Bright, that we're taking 2 steps forward and 3 steps back, but we are making progress, and we will continue to fight and to make sure that our claimants receive what they're due, and that they get a fair result. We must again thank the TTA for their support in building this movement in order to make sure that the insurers are held accountable. We must also thank the FSCA for their transparent manner in which they've dealt with these claims. They've been vocal from the outset. They were instrumental in the relief payments, as well as getting the insurers to understand that they needed to be reasonable, not create barriers to claim. And we think that that was a good show of strength by the FSCA, and we're very grateful for their support. To our legal team and to our partners that have gone through it, and to our clients, we're not over yet. I do think that this will probably take another 6 months to close out in terms of bringing the majority of the claims to finality. But we're not going to lose any passion in terms of trying to resolve these claims, and we'll continue to fight. So thank you, Nico.
Ryan, you guys have been amazing. And I think, through all of this stress, I mean, people need money to run their businesses, and that's exactly why we were insured. And to have this hiccup and something that is not something that we have to deal with normally, you guys have been truly amazing. I mean, from my own business as well, we're a client of ICA, and it's just been a pleasure. So I think also one thing that you have discussed with me, and I think what people don't realize is that, and what we don't think about, because this is your game, when you told me about how many experts there are available normally to deal with stuff like that, if you maybe want to just like talk to people about the challenges that you have and why it's taken so long. Because there's one of the questions that one of our people, our attendees asked is like, why is it taking so long? So I think that's everybody's frustration at the moment. But when you told me, it made a lot of sense. If you say like, of only 36 people that specialize in claims like this, you have 8 on your panel. I mean, normally with a major disaster, it happens isolated. Now it's worldwide. How do you deal with all of this?
And normally in catastrophe environments that I've experienced, with earthquakes in New Zealand, hurricane losses in the States, you do fly in, resources from other regions. Whereas in terms of this, there are no other resources because all those other regions are as busy. So like I said, there is training on the go happening, but that also creates some delays. I think Sedgwick's have been quite good as a loss adjusting company in terms of bringing in additional resources, but I think that the insurers that are practical with these settlements, we're talking margins, they are fighting with us over 2 or 3%. We're saying, listen, the insured says they'll concede the 2 or 3%, just pay swiftly. But yes, those settlements are still taking 4 weeks to work its way through the system. We had periods where we had submitted claims in February or even in mid-January, and only 2 months later where we're getting a response despite numerous requests. And we do appreciate that there are limited resources, and that the insurers weren't willing to pull the trigger on getting the adjusters moving on these claims earlier. But that's not an excuse. The other thing that we're not seeing is the insurers aren't dipping their hands into their pockets and saying, what, we've actually made 6 to 10% in interest and investment income with your money over the last, year. So what, to pay a little bit extra on your claim to fight over the 3 or 4%, let's just pay it and move forward. We're not seeing that sort of behavior by all the insurers. We're definitely seeing it by some. And like I said, I think that those 4 insurers have definitely stepped up to the plate. The engagement with Old Mutual recently has been exceptional, and F&I, hopefully will be the same. So, and Santam and Hollard, as I said, have been very good during the process.
Excellent. So I think, each claim is unique. I mean, there's no one size fits all. And I think that's what obviously you have to look at individual policies, the wording, the the indemnity period. So there's a question here that has just been brought up by Solani. It says what to do if a formal claim was not sent, only WhatsApp communication. So obviously stuff like this needs to be investigated. What did you do? Where was it sent to? So it's a conversation to be had instead of just having to answer it. So we'll make sure that we are going to share Ryan's details with everybody, so that after the event, and also we'll share the video, so that you guys can get in contact, because it's all unique situations. It's not one size fits all. Do you agree with that?
Absolutely. I think that each case needs to be investigated on its merits. You know, an issue like Solani's, insurers are taking a fairly hard line where they believe that they've been prejudiced by any late notification of claims. But at the same time, I think Solani, you know, to approach the FSCA, you know, or to approach the Ombud on those sort of issues, if you're still finding resistance from the insurer on it, is definitely the way to go. I think, like I've said, I think the FSCA have been absolutely exceptional in the handling of this, and I think that you'll get you know, fair treatment. You know, there is the regulations that guide the industry, or the treating customers fairly regulations, and you know, that's definitely what these insurers need to understand, is that, you know, if it's a valid claim, if it was late notified but it was done, you know, accidentally or in error, they should be finding a way to help the client. It shouldn't be a hard black or white. That being said, if there is prejudice to the insurer, well, then they are within their rights to argue that there has been prejudice and to deny the claim. The FSCA did warn clients about late notification of claims and the like, but I am sympathetic to Solani's position, and I think that you know, you should put your case forward, and see what the insurer has to say.
Excellent, thanks, Ryan. Then also we've got a question here from Willem. Says, hi Ryan, thank you for your work. If the SCA matter about the indemnity period rules in favor of MA Africa, do you feel it will set precedent for other policyholders and other insurers?
So I don't think for other insurers, but I think it will set precedent for other policyholders with Santam, with HLU, who have got a similar or identical policy. The issue is around ambiguity. Santam themselves have said that the impact will be a large impact across many clients. You know, and I think that yes, there will be an impact. I think that the judgments themselves have had an impact in terms of how policies should be worded and how it should be put forward. You know, and it shouldn't be ambiguous, like we're seeing with the MA Africa case.
Yeah, absolutely. All right. So Ryan, in terms of us having any other questions, and we'll see later towards the end, we're gonna also now bring in the FSCA to join us. If everybody can just give us a second, and also everybody that's part of this webinar will be added to the newsletter for Insurance Claim Africa. So please, Ryan and them, they do a lot of effort with giving us detailed feedback and updates. Please look out for those emails and read them. They are making a lot of effort with that. Right, if you guys can just, thanks Ryan. If everybody just give me a second, I'm gonna just bring in the team from FSCA. Sorry guys, one second. And right, next up is the FSCA. So we are joined by Mr. Mahompi Rapasha. He is the head of Insurers and Retirement Fund Benefit Administrator Supervision. And then also 3 of his other managers is Ms. Bianca de Vries, Ms. Marilee Victor, and Vanessa Pareachi, that is going to assist us with some of the questions that we received already. Magopi, thank you for joining us today, and thank you as well for giving the TTA your time and attention. When we first approached the FSCA a little over a year ago, the Financial Sector Conduct Authority, FSCA, is responsible for market conduct regulation and supervision, and it aims to enhance and support the efficiency and integrity of financial markets and to protect financial customers by promoting their fair treatment by financial institutions such as insurers. The FSCA has made a number of statements to insurers during the year that has passed, and I would like to hand over to you now to give us some insight to the questions asked and some feedback. Let me just see. I'm so sorry. Makompi, sorry, technical issue. I'm bringing you in. Good morning, Makompi.
Hi, good morning, Nico.
My apologies. I thought I let you in and then I didn't. Welcome.
No, I am here.
Excellent. I see that I am unable to find Marilee Victor on the attendee list. So, but I'm sure that everybody of your team should be capable of answering the questions.
Yes.
Awesome. Great. So, Mahompi, thank you guys so much for taking the time today and also to help us with some answers. I have a couple of questions that was brought up by attendees specifically relating to the FSCA. If I can start with the first one, and then you can guide us to who would be answering, yourself or any one of your team members. First question that we have is, says, have FSCA noted any insurers that are still not accepting liability for these claims?
Yeah, thanks, Nico, and thanks to everyone on the call. As you may be aware, and as has already been indicated, the FSCA has done a lot of work around this topic of business interruption cover. We have issued a number of media releases, as you have correctly pointed out. And I guess maybe before I get to your question, I think one of the most important media release perhaps that we came up with was Communication 34, where we looked at the policy wordings of all insurance companies in South Africa that are offering a CBI cover, and then we categorized those into 6 categories. And we found that in respect of 3 of those categories, then there was a sound basis for holding insurance companies liable. So coming to your question, Nico, whether we have seen insurers still not accepting liability for these claims, what we can say is that from our engagement with insurance companies, most of the insurance companies that we're engaging with, they are accepting liability for CBI cover. The problem was before the legal certainty was provided by the SCA in December. That was when there was a problem when insurers were rejecting some of these claims. But we have seen after that judgment, even some of the insurers revisiting those claims that were initially rejected. And then we felt that that was a very good thing. But we do, however, have some claims where we are advised that insurance companies are still waiting for certain documentation, either from policyholders or from brokers. And we believe that once those documents have all been submitted to insurance companies, then insurance companies will try to expedite the processing and settlement of these claims. What we have also seen is that we still have got 1 or 2 issues that are still before the courts, and it has already been mentioned at this webinar. So those issues, once they have been resolved, it is our expectation to see insurance companies really settling these claims. But we don't really see a majority of insurers rejecting these claims. We do, however, have a situation where we are engaging with 1 or 2 insurers on some of the issues relating to these claims. Thanks, Nico.
Excellent.
To find out if there are any follow-up questions on what I have said.
I think what we can do is let's run through the questions, and maybe if there's not any other, if people need clarity, then obviously we can ask them to bring it up. I think that was a pretty good and detailed answer. Thank you. The second question is how is FSCA monitoring insurers' adherence to judgment and FSCA directives?
Yeah, thanks, Nico. I'm going to ask my manager, Vanessa Padayachi, to respond to that question. I will chip in if necessary. Vanessa?
Thanks, Mahompi. Yes, it's Vanessa here. So to respond to the question, the FSCA hasn't issued any directives as such, because the directive has a certain legal connotation in terms of our legislation. As the gentlemen, Nico and Ryan, have indicated, we have issued various communications and guidance documents to the industry at large. And in instances where insurers notified our officers of proposed amendments to their policy wordings, our office has supervised that process in the sense that we requested them to provide us with those notifications, and we also conducted random sampling to see whether or not those communications were sent through to our policyholders. We also tracked trends through our engagements with the Ombudsman for short-term insurance, because we are aware that a number of these matters went through to their offices. And we also received complaints, and as and when those complaints came through, we engaged with the insurers and investigated those matters. We are still receiving a few other complaints that are coming through, but by and large, the number of complaints that are coming through have reduced significantly since the judgments were issued in December. We had, after the judgments were issued, engaged with the relevant insurers that were involved with these policies, specifically their senior management. This was around early January, and it was more to understand how they were going to respond to these claims in light of what came through in the judgments. And we were cognizant that the reinsurers play a critical role in this process as well. So we also had a similar engagement process with the reinsurers. And after those engagements, we found that most of the insurers were confirming that they were proceeding to assess the claims and use the sentiment that was echoed in the South African judgments. Thank you.
Awesome. Thanks, Vanessa. The next question is FSCH aware of the bottleneck and the delays in the adjustment of these claims?
Thanks, Nico. My manager, Marilee Victor, will answer that question.
Thanks, Marilee.
Thank you, Mahompi. I think where we became aware of bottlenecks, we did engage those insurers to understand what was the problem in that specific scenario. We did not really find in most instances that there were unreasonable requests or delays from the side of the insurers. Mostly we found misunderstanding or miscommunication regarding the claim requirements and the onus that was placed on the insured. But what we focused on there is to advise the insurers to be very specific and very clear on what they communicate to policyholders in terms of what they require for purposes of proving the claim and the quantum. We found no deliberate evidence of deliberate or malicious delaying of claims, as I said. So I don't think if we have to, if from our point of view, the engagements we had, we did not seem to find anything, and we held hands in the few instances where we felt that the insurer could help the insured specifically in that instance with what they required.
Awesome. Yeah, I think also it's very important that, you know, if we do pick up anything like that, it would be great to get that assistance, because people are really desperate. We need to move this along as soon as possible. That's exactly why people are insured, so that they can run their businesses and especially when it has been as severely interrupted as currently with COVID-19. Thank you, Marilee. So the next question is FSCA receiving an increased level of complaints pertaining to insurers' treatment of customers?
Yeah, look, I think, Nico, this is it's a wide question, but insofar as it relates to BI policies, what we can say is that the number of complaints has reduced since the judgment by the SCA was handed down in December this year, where clarity was provided on a number of issues, including the issue of legal causation. But obviously, we do time and again get copied on some of the complaints that policyholders will send to insurance companies, where they are complaining about the delay, the time that this is taking. And Nico, you have already asked Ryan about this. It's really a complicated process, you know, and we understand that people have been in a difficult financial position for quite long. And we always urge insurance companies to try and expedite the settlement of these claims. But since the judgment in December, we have seen very less claims in relating to CBI cover. And the few complaints that we have seen is just relating to the time that it is taking to process this claim, which is quite understandable.
Yeah, makes sense. Thanks, Mahompi. Next question, is FSCA aware of the quantum disputes between insurers and claimant pertaining to salaries and wages? Yeah, this is it's a good question, Nico, and I think Ryan also touched on this. It's a very controversial issue around the savings. So, as you probably know, there is the Ombud scheme in South Africa. So when it comes to the issue of the quantum, what the policyholder is entitled to, you need to go to the policy wording to try and calculate that. So because of that issue, the OSTI, the Ombudsman for Short-Term Insurance, will be best suited to look at the issues of quantum, because that's really a contractual dispute. You've got to go to the policy to really calculate what the policyholder is entitled to. Where the FSCA features is when it comes to the fair process, when it comes to the assessment of these complaints, and we look as to whether the insurer is really following a fair process, whether the documentation that is required from the policyholders do not constitute an unreasonable barrier for that policyholder to lodge a claim. But in terms of the quantum itself, what is being taken into account, one will have to be guided by the policy, and such issues will have to go to the Ombudsman for Short-Term Insurance. But just on that point, Nico, if I can just make this point very quickly, and Ryan also touched on it, the issue around the transit loss, where we know that the SCA found that this is a composite insured event. You have got the lockdown, and then you have got COVID-19 that must be in place at that particular area. So what we have said is that because of the way the FSCA found that this is a composite insured event, so when the insurance companies are going to apply the transit loss, obviously they cannot take into account something that, according to the judgment, formed part and parcel of the lockdown. So I think we are monitoring that. And then if insurance companies are taking certain factors into account, then we will want to know what those factors are. Can they not be viewed as part and parcel of the lockdown? But to answer your question, when it comes to issues of quantum, those have to go to the OSTI. We are looking at the fairness of the process that an insurance company follows when assessing these claims. Thank you. Great, thanks, Mahompi. Next question: what are the key learnings of the FSCA what are the key learnings the FSCA has gained from the business interruption COVID-19 claims?
Okay, thanks, Nico. We will bring Bianca de Vries on this one. Bianca?
Thanks, Mahompi. Good morning, everyone. From an FSCA perspective, but first and foremost, I think for all stakeholders involved, there definitely were some valid learnings that we took from this experience. Coming from an FSCA perspective, we realized that we as a regulator need to encourage insurers more to regularly assess the policy wordings. As you are aware, we did an extensive exercise as the regulator as well, going through all the policy wordings, and there seem to have been different interpretations at the end of the day, and what was, meant to be covered to the extent that was conveyed in the policy wording, what the intention was of the insurer to cover, that came through in the policy wording. So the policy wordings was definitely a key learning that we took from this, and to obviously, just encourage insurers and even policyholders for that matter to review the policy wordings, and that everyone is, on the same page and understand exactly what is covered and what is not covered by virtue of looking at the policy wording. One of the second factors, key learnings that we took away is that there's definitely a need to develop a conduct risk supervisory framework for reinsurers. We also saw in this matter that the reinsurers were, a critical stakeholder, because in as much as the insurer was the underwriter of the risk, they also had reinsurers at the back of them that also, were taking on some of these risks and assessing the risk that the insurer was underwriting. So from a conduct supervisory perspective, we don't really currently have a framework in place that supervises the reinsurers. So that is definitely a key learning that we took away as a conduct regulator. And lastly, I think just ongoing enhancement of the current supervisory framework to ensure fair outcomes to policyholders. So that we normally do on a continuous basis, but the learning from this experience has identified the need, for us just to push forward and to continue with regularly also just assessing our supervisory framework and making sure that it results in the best possible outcomes from a policyholder perspective. Thank you.
Absolutely, Jana. I think if there's anything that happened from COVID, I think everybody is very much aware of how they need to scrutinize their policies and look at their wording, because a lot of the questions that comes up now is like, okay, so who do we trust? Where to now? And these are the things that we need to also take ownership as insured parties, that we make sure that we know what we're insured for, exactly what it is that we're paying for. And so we all definitely had a lot of learning curves from this. Thanks, Bianca.
Nico, just on that question, yes, you're quite right. But also, I think it is very important that these wordings be very clear, because
transparent.
Want to understand them, if the policy wording is quite complicated, you might struggle. I mean, if you have got a policy wording that a lawyer will have to read 5-10 times to understand,
exactly.
Imagine what a lay person will happen to them when they're trying to understand that wording. But you are quite right. Everybody must take the responsibilities of understanding what they are covered for.
And it should be clear and transparent, because like you say, for the normal man in the street, that is not in the insurance game, if you don't know what is actually going on in your policy, that's where your underinsured risk also comes from at the end of the day. Absolutely. Thanks for that, Mahompi. Right, the next question. Is there an increase in claims against PI broker? Is there an increase in the claims against brokers PI cover? Uninsurance, for instance, inadequate advice, errors in placement. Are you guys aware of that, or do you know of the increase in those type of claims for PI cover?
Look, Nico, at this stage, we have not seen an increase in that regard. I think maybe insurance companies that are providing professional indemnity cover may be able to shed some light on that. But from the FSCA side, we haven't seen an increase in respect of that. But any conduct of a broker that we feel that has got the potential to lead to unfair outcomes to a policyholder, we have got a separate department. It's not this department that is on the call, but there's a department that is responsible for looking at the conduct of brokers. But I just think that the point that I want to make here is that, I mean, if you look at the whole issue, yeah, I wouldn't be totally surprised if you have got some claims that may be lodged against brokers. It is quite possible if you look at the whole thing, how it has transpired. I think there may be a basis to hold some of the brokers liable, but we have not seen an increase in respect of professional indemnity insurance related claims, Nico.
Great, thanks, Magompi. 2 more questions. Second last, that the insurers who paid a negligible relief payments complied with the spirit of their recommendations.
Yeah, Nico, the last part of the question is not entirely clear to me when we talk of the recommendations of insurance companies. But what I can say on this question is the following. As far as we know, we are the only country where we were able to negotiate a successful interim relief payments to policyholders. I'm not aware of any country in the world, any regulator that was successful in having this. But I think 2 points that I want to make. I think the first one is, it is very important to bear in mind, and I'm not suggesting that insurance companies did policyholders a favor here, but I'm saying they were not obliged to make this interim relief payments. This was a subject of intense discussion between the industry and the FSCA and the Prudential Authority as well, which formed part of that. The second point, which is very important to keep in mind, is the fact that when insurance companies providing CBI cover provided this interim relief payments, they did this without the support of their reinsurers. So that's important to keep in mind. But the other related point is that, what did the industry promise to do? The industry promised that if the judgment was to go against them, then obviously when it comes to this interim relief payments, then they will deduct the amount that will have already been paid to a policyholder in the form of interim relief. But if the judgment went in the favor of the policyholders, insurance companies were essentially going to write off that amount. They were not going to go after the policyholders to recover that amount. And as the two authorities, when we looked at that, we thought that it was very important, subject to certain requirements, Nico, which you may be aware of. We have stated those requirements in one of our media releases, that this interim relief payment must reflect a fair value of the claim. So that was one of the requirements. We have also picked up that some of the insurers were making this interim relief on a full and final settlement basis. And then we said that if you are going to do that as an insurer, then obviously there must be proper disclosure to a policyholder in writing, and clearly highlighting the consequences of accepting an offer in a full and settlement basis. So to come to your question, we believe that insurance companies have done the best that they could under the circumstances that I have described, Nico. Thanks.
Yeah, we might respectfully have to disagree if you are the insured, because at the end of the day, you know, according to us, the policy wording is very clear, and the instructions should have been very clear. So an interim payment was obviously very welcome, but wasn't really what the outcome is that everybody wanted. But yeah, I agree. It was a step in a right-ish direction. But the interim payment, I don't think people are in the game because they're being generous. I think payments were made because they know what was the right thing to do. My humble opinion.
Absolutely. I take the point, Nico.
Thanks, Magompi. Then the last question that we have, do FSCA think that insured should receive a copy of loss adjuster reports as a standard procedure, since it's their business and claim that is being portrayed to insurers in these documents?
Yeah. Yeah, it's a very tricky question, Nico, this one.
We're not going to ask you easy questions today, Mahompi.
Yeah, so what we think here is that obviously, as you all know, then a loss adjuster then will be appointed by the insurance company to assess the claim on their behalf. But we believe that in answering this question, one can say it's yes or a no, because we believe that it will really depend on the circumstances around the preparation and obtaining that loss adjuster's report. You will know, Nico, I don't know whether your background, you are a lawyer, but those who are lawyers will know that there's what we call legal privilege in law. So if a document was prepared in contemplation of litigation, then there's a basis to argue that it is covered by legal privilege. And on that basis, it is possible that an insurer may argue that they don't need to provide the policyholder with that report. And the point is quite correct that this relates to the claim and of the policyholder. But what we think here is that the insurer obviously is obliged to inform a policyholder of the basis on which it arrived at the amount. You know, it will be nonsensical to refuse to give a policyholder a report, but at the same time not providing the policyholder of the basis on which you arrived at the amount that you believe is due and payable to a policyholder. So we believe that even if the insurer may not provide the policyholder with the loss adjuster's report, but that information which forms the basis of the calculation should at least be provided to a policyholder. It can be in the form of a letter where you really show how you arrived at that amount. And then obviously, if you have got a loss assessor on the side of the policyholder, then that can be a basis of engagement and of challenging that the decision of the insurer. But it's a difficult question to say yes or no. I think it will depend on the circumstances. I guess what I'm saying is that at least the basis on which the insurer arrived at the amount, that must be provided to a policyholder in line with TCF principles, Nico. Thank you.
Right. Thanks, Mahompi. I think let's quickly have a look. There is a question here for you guys that just popped up. Now that the insurers have removed ICD clause from policies, is the FSCA driving a government initiative similar to SASRIA to give us insured cover in the future?
Yeah.
From Dennis. Question from Dennis.
Yeah, sorry, I think there was an abbreviation. What's the ICD? Sorry, I just want to get the question.
Now that the insurers have removed ICD clause from policies in the from policies, is the FSCA driving a government initiative similar to SASRIA to give us insured cover in the future?
Yeah, look, Nico, I think in answering this question, I think you may recall that we did, when we saw these endorsements coming from the industry, also provided guidance under the circumstances in which these endorsements will be allowed. And some of those requirements that quickly come to mind is whether the policy allows the insurer to do those endorsements, whether there is a clause in the policy which provides for that. But on this specific issue, we haven't really started engagement with SASRIA. It is something that we may consider and have to take it up with them. I mean, we know that that's really a government insurer, so there will have to be those discussions to see what will be within the capacity of that insurer, taking into account its nature. And also we have to keep in mind the mandate of SASRIA, whether this will be within the mandate of SASRIA. So I think it's a good point. It is something that we can take it up with government and see whether this can be included. But as I say, I think it will, one of the considerations will be whether this will be within the mandate of SASRIA, Nico. Thanks.
Great. Thanks, Mahompi. It looks like we've got 1 or 2 questions that is more directed at Ryan. So guys, do you mind staying until we're done?
No, we don't mind. Maybe there may be further questions for us. So.
Okay, brilliant. Okay, only two questions extra. Ryan, there's a question here from Brian. He says, is there any positive news from policyholders who have business interruption cover but don't have an infectious disease extension?
No. Currently, we don't believe that any of the litigation that we've run provides them with hope of a claim. There is currently international litigation on the go, I think in the States, around the issue, but we're not aware anywhere in the world where it's receiving any positive response from insurers.
Perfect. Thank you. And there's also from Anonymous, is there a further appeal court available in the event that the SCA hearing outcome is found in the favor of the insured, i.e. against the insurer?
So, I mean, the next step above the SCA is obviously the Constitutional Court, and it would have to, either party would have to then argue why it is a Constitutional Court matter. I think that once we have an SCA judgment, like we did with the Cafe Chameleon case, I think that the insurers and the insured will probably abide by the decision, but obviously we can only judge that once the verdict is given.
Awesome. Great. I think that sort of like concludes our session. I just got a message from Bronwyn that basically reminded me how humble and grateful we are for the time that Ryan and Magompi and the FSCA has been given the TTI. We are really, really blessed, and I'm so grateful, for what you guys have done. We get so many calls that we never know, always exactly how to answer, and you guys have been such a blessing for what we're all going through. We really, really appreciate it. Thank you guys so much. And then with regards to any other information that we would that you would like answers on, we're going to share Ryan's details, or you can email secretary@twanitourism.com, and we will definitely also share the video of this webinar with everybody that's part of the session, as well as to share with anybody that could not make it, because I think this was a great session and very informative. Thank you guys for your time, Ryan, Bianca, Vanessa, and Marley, Magompi. Guys, thank you. We really, really appreciate your time today.
Thank you very much.
Awesome.
Thank you all.
Thank you.
Have an awesome day. Thanks, Ed.
Bye.
Bye-bye.